And welcome to the Sabrina and Ben Real Estate Show. We're glad you're with us today. And Sabrina?
Good morning. Thank you for tuning in.
It's right there.
I say it's still morning. I don't know, though. I've been around the world and back already today. I've written an offer. We've had a sales meeting, all kinds of good stuff going on. We're reducing houses we have listed. Good deals out there. People need to go to our website and check them out, SabrinaRealty.com.
That's SabrinaRealty.com. That's Sabrena Realty, REALTY.com. There's listings on there, folks. Some prices have been reduced. It is a market.
And that's the trick, too, is to spell my name correctly. So thank you for pointing that out, because no one wants to spell Sabrina.
I spelled it wrong for a couple years, so,
it's okay. It's okay. You got to think of the good witch.
That's right.
We make it happen.
That's it. So who else we have here? We got Mark.
I'm here.
Mark.
Good morning, Mark. Hey, where's the sunshine today, Ben?
It's here.
Yeah,
it's here. It might not really. You might not see it. Might not see it, but you got to have a little vision.
Wherever we go. By the way, I have to really brag on you guys. We're doing a couple of deals together, and you've got a good staff over there. They really communicate, let you know what's going on, and that is so, so important. You've really trained them right.
Well, thank you.
How'd you do that?
Through failure. No, you start at the bottom, no matter what you're doing in life, and sometimes you have to aspire to be like the best, and you have to emulate the best. You benchmark off the best, but at the end of the day, you have to learn through your own actions, through your own failures, and don't be afraid of failure, right?
Well, I've been reading a lot of leadership books lately, and it talks about how important it is for a leader to be vulnerable and be humble. And you're speaking now with humility. That is a true attribute. You know, people are attracted to that. Wow. When someone is willing to be vulnerable or be humble or say, hey, I made a mistake, and you just said, hey, you learned everything through failure. That's a big admission, but it's a true admission. And people are starving for the truth. They're
Amen.
starving for the truth. So I think it's good that you can admit that. Well, we're going to open up the phone lines today, right? We want those tough questions. Anything related to real estate, mortgages. We will even talk about Trump today if somebody wants to.
Oh, that sounds fun. Trump that.
But we're here on Hot News Talk Radio, AM 1240.
Wait, how do people get a hold of us?
They can call us right now. The phone lines are open at 423-800-8949. That's 423-800-8949. We want to hear from you. Any kind of question about real estate, mortgages, we'll even talk politics with you, won't we?
It all ties in.
It does. It does.
Our leaders make decisions that impact our future. And in the real estate world, with the financial stuff tied to it, every decision from the Dodd-Frank bill, 2008, that impacted the way we do business, and it's added some costs to the loan process.
Well, we've gone through a lot. I mean, our industry, the real estate industry and the mortgage industry. You remember the government shutdown?
Oh, yeah.
You think these politicians don't affect your life? You remember the government shutdown? I had 5 deals that were put on hold because of that.
You don't want to lose the deals and have them put off, but you almost would like for them to shut down every once in a while. We're doing so much damage.
Yeah, but that brings up a great point you make, because one of the big things that I always harp on is this economy is ran off of something that's not even, you can't put your finger, your hand, you can't feel it.
Mm-hmm.
But I try to feel it, and it's confidence.
Right. Consumer confidence.
Right. So I had some friends back when that was going on. I had some friends that had some high up positions in the government. They were protecting us day after day. They were keeping our nukes, tied down, making sure that those things were working properly.
Right.
They were fearful for their job, and they weren't going out to eat as much.
Mm-hmm.
They weren't donating as much to church and things like that because they were fearful.
Right.
So it's an emotional state of mind that drives it. So right now I've heard a couple people mention things like recession because of the jobs number that just came out. Yeah. And the jobs numbers have been very strong for a while now. And now we just got a really bad jobs number. And, at the beginning of this conversation, we talked about humility a little bit.
Right.
I think it's important to balance that out with the confidence. And there's a scripture that I always remember because it has a little bit of my last name in it. Philippians 4:13.
Yeah.
I can do all things
through Christ who strengthens me. And that is so true.
So I think it's important to be truthful and be humble about your mistakes and your shortcomings, because we all fall short, right?
Well, it's what people want, though. I mean, people want the truth, and it attracts them to you. Sometimes the truth hurts. But and isn't it always hard to find that true friend who's willing to love you enough to tell you the truth, willing to care enough and say, hey, you don't need to do that. They're willing to be honest. And that is so rare, but it's what we're all starving for.
Wow. That's good stuff.
Sabrina. And I tell you, though, if people call us, I mean, all my clients, no joke, I've said from day one, I'm not living for the deal at hand. It's always about the big picture.
Amen.
And the big picture is, you come and sit down in my office, I'm going to give you the same advice I would give my brother, my mother, my best friend, who I love them all dearly. So I'm going to treat my clients that way, and I'm going to be honest with them. And sometimes, and that's rare, because there's so many people that have it in their mind, like when it comes to real estate agents, but they're always wanting to sell you that highest price listing. Well, I was working with a couple last night, and I'm not saying this to my own horn. I'm being so honest. This is a young couple. They're getting married in November. They're looking for a house. Well, when we started the process, they were looking in the $180,000 to $190,000 price range.
Because they qualified for that.
They sure did.
So
both have good jobs. Both have good jobs. Well, last night they called me and they wanted to see a house that was in the 130s. Price range. And so we went out, showed it to them. They instantly fell in love with it. As a matter of fact, we wrote an offer on it this morning. But, we're out there talking, and they asked my opinion. I said, you asked me, I'm going to be totally honest with you. I think you guys are making a much wiser decision, especially starting out, going to be a newly married couple, right. Starting out with a lower price range. I said, you guys are going to want to go on vacation. You're going to want to date. You're going to want to go to movies, eat out, all that good stuff. I said, it is so important that you not strap yourself to a very high house payment. And we know, is that not one of the main stresses on a marriage anyway?
It's financial, no doubt about it. And the fact is, what you just told me, I was doing some numbers in my head as soon as you did it. Going from $190,000 home to $130,000 is fantastic, because you take the $60,000 and I just call it 60, it's 61,000. So each one of those thousands is about $5. So the 60 times 5, it's 300. And then you got more expensive taxes and insurance. So it's about $400 they saved on that home by buying that $130,000 home. Well, $400 a month.
That's your groceries or your gas.
Gas, or 400 times 12 months of the year.
4,800.
There's your vacation.
Yeah.
Your big monster vacation's paid for, instead of on a credit card earning 24% and doubling every couple years. You're not getting the value out of life if you overbuy, if you buy too much. And let's face it, they're new. You said first time home buyers, they don't understand what stability is.
Exactly.
Their jobs are new. Whether they've been there 2 to 3 years, there's something coming around the horizon. There's life happens.
But you and I know, and this isn't tooting my horn, this is just reality. How many realtors?
Come on, toot your horn a little bit.
How many realtors would have wanted to sell them that $190,000 home as opposed to that $130,000 home?
Most would.
And so that's the whole point about looking at the big picture. I'm looking at these people. They're young. They're first-time home buyers. They're just getting married. And I have an opportunity here to start a long-term relationship with this couple. So I'm going to do them right. And I'm going to think 5 years down the road, when they want to sell, when they have a family, when they want to buy a bigger home, when they're more financially stable and ready to do that. I don't want them to hesitate who they're going to call.
Well, and both set of parents were there last night too.
Yeah.
And they saw what you were doing and giving them good advice. And so that hopefully is going to bring more business.
It all starts with the right realtor.
And the right mortgage lender. And absolutely. I know that you're honest. You're very honest with people.
Right. And
I know that you're trying to get that perfect loan for them, because you almost have to customize the loans to meet the individual's needs. Because if they don't have a big down payment, you've got to find that product that's not going to make them have to, put a significant down payment down. So you've got to customize things, and you've got to try to meet their needs and think outside the box, just like we do.
The toughest part about my job is the relationship aspect of making someone feel excited about taking on a new debt. And making them feel confident.
That's challenging.
Making someone feel confident when you yourself may not be confident in the person, the information they're giving you.
Right.
Our job becomes a balancing act of those things. It's the confidence in the loan process, and are we going to get those folks approved? And that's why the right financial, the right mortgage company is very important.
What are the rates right now, Ben?
In the 3s all day.
Oh my goodness! Now, is that every type of loan, whether they're getting FHA, conventional, or VA, or
they're solidly in the 3s. I mean, we're gonna say it's like a turtle. Might poke his head into the 4s a little bit, but you're pretty much in the 3s right now, and you got maybe a 4.0, 4.1 out there for a couple special products where a little bit lower credit score, low down payment, the combination of all those other variables,
right?
And maybe doing a low loan amount as well. So,
are you hearing any reports that the rates are going to go up anytime soon?
No, not at all. There's no doubt that there has been. I don't think anyone's surprised about this, but there, in Europe, there's been terrorism, and in China, there has been a sluggish economy. In certain parts of the world,
right.
It's pulling down our ability to really go forward because we're all tied together in this global economy now.
Absolutely.
It's not that we're happy about it, but it is what it is.
Absolutely.
We're a player in a global economy. We are the number one player, which tends to make you have a target on your back. No one is happy that we were adding 200 to 300,000 jobs every month, and while they were losing jobs.
Right.
Just 2 days ago, Australia reduced its interest rates. That was a big surprise, and rates went down a little bit. So there's things that are impacting our market, and it's outside things outside of our market. I think what helps me is the fact, I always remind myself that some of the greatest companies were started in a recession.
Yeah, that's true.
I started our business in 2008. I started my own company, and that was right in the middle of the recession.
That was right when it began. And see, that's kind of how we were too. We were in a franchise, and it expired, and the opportunity to renew it came up, and I had to make a decision. And I did a lot of praying, a lot of soul searching, just thinking. And in 2010, and that was right when things were really at its worst.
That's right.
Worse, I took a leap of faith, and I'll tell you, it's been the best decision that I made. Now, what you got to do is survive during those times. And so you can't survive if you continue to do business the same way. So you have to get a little more strategic. You have to think outside the box, and you have to change the way you're doing business. Now, we had an opportunity to really almost be a ministry in a sense during that time, because we had so many people come to my office that were behind on their mortgage, or were, that they had the threat of foreclosure. And we were able to help them either work out a loan modification or a short sale. Now, we're not seeing that now. Things are booming again. Yep. But what you've got to do during those times as a business owner, and this, you've got to survive. So you've got to be able to adapt to whatever climate you're in. And I think that it makes us a stronger person, though, at the end of the day. And if you think about it, life, every day things evolve. It does not matter what industry you're in, because of technology, because of advanced technology and stuff like that. We can't get in our comfort zone and stay there for too long. We have to be willing to get out of it and continually learn new ways of doing things.
And success breeds success. So, you work hard, you sweat, you put your time and effort into it, things pay off.
Right.
And that's what we do every day at Sabrina Realty and at HomeRate Mortgage. We are helping clients each and every day. And it's exciting when you change someone's life and they're surprised that, oh my goodness, I'm getting a $150,000 home and I'm paying less than I was paying for rent. And the rent was a 1-bedroom apartment.
Exactly.
It's an exciting time to take a look at your financial health, your housing health, and make that health a little bit better down the road.
That will help your mental health.
Absolutely.
You know, so, and your emotional health. We are taking calls for anyone out there. Feel free to call us at 423-800-8949. You know, being locally, we're so lucky. I sit through my other job is county commissioner.
Yep, District 7.
So I get to see firsthand every day the exciting things going on in Hamilton County, the new businesses that are coming in, the new jobs that are being created. When you look at what the projection is over the next 5 years and new jobs and stuff, we are so fortunate and so lucky, and that's going to call for more housing, et cetera. But it's very important that we make sure that we have the workforce to meet those jobs. But people don't understand how exciting it is. And I said in that planning meeting yesterday, and all the new development that's taking place. Oh my goodness. And all the new homes. And it's hard for people, especially people that have been in a well-established area, to invite new subdivisions in and stuff like that, because they've gotten used to
traffic and maybe a bad development.
We're dealing with it. But, this is what I told them yesterday. Growth is good. And when I have my choice between growth, getting tax revenue from growth, as opposed to raising taxes,
we'll take the revenue.
I'll always take the revenue, because tax increase, that you have to factor that into a mortgage. That can very much affect your monthly payment for years and years and years. So we're so fortunate. There's never been a better time to buy. We do have low property taxes here in Hamilton County.
Extremely low compared to like Illinois, for example. The same home that has, let's say, $1,200, it's about $6,000 to $8,000. So we'll say average of $7,000 per year. We got folks paying $600 a month in Illinois for sales taxes. And my grandparents had a home up there, and I was astounded how much the taxes were up there on a normal home. I think Tennessee residents, we always want our state to improve.
Exactly.
But we do need to recognize all of the great opportunity that we have.
We do.
And act on that. And, speaking of opportunity, just the opportunity to be on this show is it's such a great opportunity for you, the listener, to engage us and change the real estate and mortgage business in the future, because that's what this is all about. It's about engaging the community, and it's about the community engaging us, and we can make a difference together, right? So I urge you, if you're at your dentist's office today, maybe tomorrow, maybe you're taking your son or daughter to the dentist, urge them to change it to Hot News Talk.
Hot News Talk Radio, AM 1240, and listen to the Sabrina and Ben Hour.
That's right, because we have a lot of valuable information, and instead of listening to music, I think people would rather learn.
Exactly, and we're always trying to give good advice. Like, for instance, right here, I have some information, Ben.
Okay, let's get started.
These are surefire tactics to getting more money for your home. So if you're thinking about putting your house on the market,
I don't think anybody wants to get more money for their home. Oh, well, okay.
First of all, they need to call Sabrina Realty and let us tell them how we can save them money, because we don't have administrative fees or hidden fees or anything like that. And if we don't sell the home, we don't get paid. So that's great motivation.
So if you want to call Sabrina Realty, what's the number? 499-7780. That's 423-499-7780. Sabrina has someone there right now. So
exactly.
Give them a call.
They're waiting. I have a great group of agents.
Let's get started. Started.
So that's the first thing you need to do. And then, of course, this is important to you, because if they can get more for their home, they can use it for their next purchase.
And the more down payment you have, the better.
When they come see you, you're going to probably be able to qualify them for more. They're going to have a bigger down payment and stuff like that. You'll be able to get them a better rate if they've got a bigger down payment. So it's a win-win all the way around. The first thing you need to do to try to get more money for your home when you're selling it is bite the bullet and make some smart upgrades. Now, we talk about this week after week. We're not going to tell someone to go and spend a lot of money in their home, because they're not going to recoup it. They will not recoup. As a matter of fact, this shows that if someone spends money, they only recoup about 64% of those costs back. So they're losing 36 to 40% right off the bat. Paint, carpet, new flooring, offer a carpet allowance. It's amazing what paint will do. Some fresh mulch, stuff like that. Cost-effective ways does not, which goes right here into number 2, boost your curb appeal.
Amen.
How can you do that? Get a broom, remove the cobwebs off the front porch, pressure wash the driveway, Clear the sidewalk. Make sure that your lawn's well manicured. Push some fresh mulch. These are easy things. A little labor, but gosh, the return. I mean, you're going to get more for your home, and people.
How much do you charge for that advice?
Free.
Okay, so here's my point here.
Now I don't come landscape. I'll give
we'll
you
get landscape
advice.
reform. But think about that. If you've got someone that's selling homes, blazing the trail, that you listen to them.
Yeah.
Listen to your realtor. They know what they're doing. They're doing this every day. Sabrina, how long have you been doing this?
I've been doing it going on 13 years.
That's too long.
And see, tactic 3, create the illusion of more space. Declutter. I mean, you want someone to come in and be able to visualize. You want them to come in and immediately make that their home and place their sofa, their recliner in your living room. You want them to come in and immediately make that their place. So declutter. Help people visualize. About 90% of the people do not have a natural capability of visualization. They just don't. That's proven. So you want to help them with that visualization. Declutter, clear things.
And that's the communication. There's some laws on communication. You have to, words don't do justice. It's actually the way things are delivered. So that visualization is the big part of how people are able to have that vision, right?
Absolutely. Absolutely. Number 4 is to hire a professional home stager. As a matter of fact, we're going to be having a lady on in the next couple of weeks. She was out of town today, but she's going to come on and she's going to talk about cost-effective ways to stage your home where you don't have to invest a lot of money, all the way to, spend thousands if you want. You can bring in their stuff, their furniture, their pictures. Sky's the limit. But she's going to start with cost-effective ways, but she's going to be on in a couple of weeks. So that's going to be a real treat. And then number 5 is pick a neutral color palette. Do you go in these homes where you've got a blue room, a green room, a red room? Let's do a nice
the purple
neutral
room.
Yeah, a nice neutral warm color throughout, whether it be a light
sand
gray.
1, sand 2, sand.
Exactly. And, if you're going to paint your baseboards, that's always nice. We want to have clean baseboards, bright white, cream, something like that. So these are just cost-effective ways to help you get more of a return on your home when you do sell it.
All right. So, hey, listen, if you want to get a mortgage quote from the best mortgage company in the world, and the only reason I say we're the best is because I'm looking at our results here.
Mm-hmm.
We have reviews online, and we are ranked number 1 in Tennessee at this moment. So HomeRate Mortgage is here to help you. Look up our reviews. Our clients are speaking our graces, and we hope you will too. But it starts with that phone call. So give us a call right now, 805-9100. That's 423-805-9100. It's a free call. You're calling to ask questions. Make the call today. We want your business. We want to earn it the right way. Sabrina, what do you got?
Well, we've got agents standing by too, just waiting to help anyone that's thinking about selling their home or buying a home. 423-499-7780. That's 499-7780, or go to our website, sabrinarealty.com. Join us after the break. We'll be back here in just a few minutes, and we are taking calls. So give us a call today. Challenge us. Ask us those tough questions. 1240 a.m. Hot News Talk Radio. We'll be back after the break. Thank you so much for listening today. Hello, and we are back here on Hot News Talk Radio, AM 1240, the Sabrina and Ben Hour. Thank you for coming back after the break. What are we going to talk about this half, Mark? I think you had some stuff
you wanted to talk about. To kind of go through the whole process of somebody decides, hey, I'm ready to buy. Who do they call first? Which one of you two? And what does that go? What are the steps I'm sure they get with Ben to figure out, can they buy? Where's their credit? What is their limit? And then they get with you. But then you two talk back and forth the whole way through to make sure that all the different reports, the HUD, termite inspections, all that stuff is coming in, because it affects both sides of what
communication is very, very important from start to finish. But if they call me, the first thing I am going to do is have them call Ben.
Yeah.
And to get pre-qualified, because if they're only comfortable with $800 a month house payment, there's no point in me going out or sending them $250,000, $300,000 homes. There's just no point in doing it.
Well, if you want to make someone else successful, which in this case, a client is trying to decide what they can afford, it it's always about meeting expectations.
Right.
So we've got to find out where that line is. And so they say they can afford an $800 house payment. Well, on the financial side of things, they start with the mortgage company to find out if that's actually reasonable. And maybe it's only 700. So just because, you know, a client believes they can afford 800, they need to make sure that the financing is available for that to be true.
Exactly. And I guess you're looking at debt to income ratio and everything. You know, we haven't really talked about when someone comes in, kind of, I'm curious, kind of what do? You sit down and tell them, because I'm sure you do you're giving a lot of advice, and you're having to ask a lot of questions to even find out where they're at financially and what kind of money they have to put down and that kind of stuff.
I think the first thing that has to be talked about is their credit, because there's a lot of information out there. All these websites that say credit score, right?
Yeah.
And the fact of the matter is, someone will say, my credit score is 740. You know, you see those commercials.
Yeah.
And she's saying, oh, my credit score, you're going to give me the best rate, and it's on. Well, the only problem with that advertising on TV right now that gives everybody the confidence is that credit score is actually not what financial institutions use. It's a type of credit score. And there are about 40 types of credit scores.
Explain that.
Yeah, let's do that. So there's a FICO version, and we have to pull 3 different ones.
Right.
And we don't get to pick and choose.
It's all TransUnion, Experian.
It's a little bit deeper than that.
Okay.
We pull 3 bureaus. One is from TransUnion.
Yeah, okay.
And, you know, it might be the Exacta 8.0. One is Equifax. And it might be the Exacta, they have different versions. It might be the 3.4. So if it's a mortgage loan versus a car loan versus a credit card, the financial institution has to pull the certain versions of FICO, Fair, Isaac, and Company.
So do those different versions affect what the actual score is, depending on which version?
Exactly.
Oh, that is
so the word credit score is nothing more than an umbrella, right? So the umbrella term is saying my credit score. Well, what is your credit score? Is it this one over here, or is it this one there? So you don't actually know what your credit score is until you are applying for the type of loan that you need at a financial institution. And guess what? We all pull the same 3 types of those: Equifax, TransUnion, and Experian. All the financial institutions are governed by HUD.
Right.
And HUD, the government, made the decisions, and they are continually changing the rules on what types of bureaus. So there's a lot that goes on behind the scenes. So first and foremost, get your credit pulled, and let's go over your credit.
Now, are you looking at an average between those 3 scores, or is there one particular reporting agency that you give more credibility to?
Right. So it is it's not an average, it's the middle score. So if you have if one bureau says 700, the other one says 650, and the third one says 650, then your credit score is 650.
Okay.
So 700, 650, 650, they're going to go with 650. So you don't get credit for that one awesome bureau. So the question I get asked a lot is, well, why is this one 700 and these other two 650? Well, they both weight things a little bit differently. They're different organizations, and they both are running the FICO model a little bit uniquely as they see for a mortgage loan.
Is there one of those 3 though that an underwriter gives more credibility to, or
no? All 3 are 100% equal when it comes to underwriting. If there is one blemish on this bureau versus another bureau, they all have to be dealt with. They all have to be recognized as per the approval. Okay. So it's very. What were you going to say?
Well, that was a good question, and I just was always wondering about that. So they're all really equal.
Yeah, when it comes to the information in them, I'll give you an example. This is a good thing that comes up quite a bit. A lot of folks have heard in the news recently that there are that you don't have to worry about medical collections.
Yes, I've heard that.
Yes, well, guess what?
That's not true.
But no, so here's the thing, and this is life, right? Life is not always exactly what it seems. I'm pulling out of my work, and I'm taking a right, and I don't believe I see anybody coming. Okay. And this didn't happen to me, but I hear crashes. I mean, East Brainerd Road is a very busy road.
Yeah.
And there's always a crash on East Brainerd Road. And I don't understand why, because what my grandfather taught me, look twice.
Yeah, exactly.
Look 3 times.
Exactly.
Cut, what is it? Measure twice, cut once.
Left, right, left.
So medical collections don't matter. I hear it in the news.
Yeah.
Well, guess what? On Equifax and Experian, those are impacting your credit score quite a bit.
Yeah.
So do they not matter?
I would think so.
Okay. So maybe not in respect to what the goal is. I can get a mortgage loan with medical collections, but what is the signal that's sending to folks when they say on the news, "Oh, your medical collections no longer matter"?
Well, if I'm a doctor, I don't want to hear that, because I want people to pay me for my service and pay their bill. But let me ask you this. Let's say that someone does have medical collections on there. There have been many instances in which I've had clients that, okay, they can get this loan, but there's this and this bill that they have to pay off at closing. So we're going to approve the loan, but these 2 bills have to be paid at closing. Have you ever seen the underwriter do that with doctor bills?
Absolutely. And the collections, there is a what's called an automated approval that we do on day one.
Mm-hmm.
A lot of companies don't do that on day one. And the reason why I spend the extra that investment in making sure I get that automated approval through our Fannie Mae portal, and over someone's head right now, but through these portals that we end up selling this paper to give you $100,000 to buy this home. Those transactions are very important. There's people investing in that piece of paper, which is you paying your bill on time, right?
Mm-hmm.
So, with that being said, there is little doubt that it's very important. It is absolutely important for you to pay it on time, but to pay that at closing, the approval might say have to clear this up prior to closing or at closing. Well, now that changed the application.
Exactly.
I coach my folks at our office that the only job for my sales team, the only job you have is to take a complete and accurate application. Now, the truth of it is, I can shorten it up and say their job is to take an application.
Yeah.
But that's not their job. Their job is to take a complete and accurate
diligent
application.
Mm-hmm.
So ultimately, the underwriter signs away the approval. And what do they call it? Clear to close, right?
Exactly.
So we have an acronym, CTC.
Yeah.
Yay, right?
Yeah. Oh, yeah.
So
my favorite.
So to get that CTC, sometimes there's conditions. Pay off this medical collection so that we will allow them to buy this home.
Right. Well, let me ask you this. I know that, people have credit cards and some people use them religiously. And you really like to see if they've got a $5,000 limit, you don't want to see that they've charged anywhere near that limit. You probably don't want them to have over $200 or $300 on it, right?
Right. Well, listen, I coach my...
Is there a rule of thumb on that?
I have my rule of thumb. And everyone has the rule of thumb. Just like when you hear on the news that collections don't matter, medical collections don't matter. Here's my rule of thumb. If I'm coaching you out there listening to the show right now, I advise you, if you have a credit card with a limit of $1,000,
mm-hmm.
I advise you to never go over $100 balance.
That's 10%.
10%. Now, Fair Isaac and Company changes their rules every year. And when I look at those, here's what I hear. And it changed recently from 35% impact and it's to 30% impact on your score. But it was called utilization.
Mm-hmm.
So in other words, you just said 10%, right? Well, if you think of the credit card like a glass,
mm-hmm.
it's an empty glass, right?
Right.
I get a credit card. I've got $1,000 I can go spend.
Right.
If you keep that glass 10% full at a max, then what you're doing is you're allowing that you're protecting your credit scores utilization.
Mm-hmm.
And utilization has a 30% impact on your credit score.
Wow.
Now, I could go into all the details of those numbers, but it equates to about 150 points. So
that's a lot.
It's 150.
That's a significant impact.
So think about this, folks. If you wonder why someone has a 620 versus a 750, 9 times out of 10, it has to do with their glass is too full.
Yeah.
In other words, their debt glass, all those credit cards combined or individually, they might not be 10%. They might be 95%.
Well, let's say that someone has a $5,000 limit and they've got $4,000 charged on it, and they're wanting to buy a house. Let's say they go pay that credit card down to where they only have a $500 balance. How quickly from the time they pay that credit card down do you see a spike in their credit score? I'm just kind of curious what the turnaround is.
That is such a loaded question, though. And here's why. Keep in mind, the credit score has been, okay, credit score models have changed, have helped put America where it's at.
Yeah.
Because now we lend based on this judgment of who you are based on a score.
And
right?
It's really history.
It is
history.
It's history. So how much, and that's a perfect word for it, Sabrina. How much history does that person have?
Yeah.
How many times have they moved around? How many addresses do they have in the last 10 years? There's little tiny things.
How many jobs have they moved around on?
Right.
Yeah.
And even though folks say, well, that doesn't have any impact. Well, that's kind of a misnomer. It's not that they have a major impact, but it certainly has a more major impact if there's less history and more changes.
Right.
So how many accounts do they have? How old are those accounts? If I had a cup in front of me right now and it was Jesus's cup that he drank from, the Holy Grail, I guess how much that would be worth? Yeah. If everybody agreed that it actually was the cup, it'd be worth a lot of money. Everybody would want to touch it, maybe even drink from it.
Exactly.
The cup of life. So the most valuable cup in the world, right?
Exactly.
The cup that Jesus drank from. Well, let's face it. It's because of its significance in our lives. It's because of its ability to say, wow, that was a long time ago. That was something of historical significance, and it would be worth a lot of money. But someone that just got a credit card for $1,000 and that's the only account on their credit report, it's going to make a much bigger impact if they have an $800 balance on it.
Yeah.
And if they pay it down to $100, it's going to have a huge impact on their credit score.
Yeah.
But someone that's been, they got a 699 credit score and they want to get to 700.
Yeah.
Paying it down is not necessarily going to impact because there might be more history. And therefore, that's why you want your history each and every day to become good, positive history, because it all adds up at the end of the day, right?
Right.
So here we are talking about credit score, and we're stuck on it because it's such an interesting topic.
It is.
And there's so many folks that don't get approved. And I actually have a rule of thumb. Everybody's approvable.
Oh, I believe that.
Did you hear that?
I believe that. As long as they're in with the right person and they're getting the right advice and they're getting sent to whoever can help them.
Because keep in mind, you might not be able to obtain that loan at this moment due to what I see on your credit report.
But it can change if you're serious.
It can change if you make one step, and sometimes 2 or 3 steps, and 2 months later you're approvable. Well, guess what? Sometimes it takes 3 months to find a home.
Well, it's just like going to the gym 3 days a week or losing that 10 pounds. It takes that first step, and then you have to stay committed to it.
Yep.
I'm kind of curious about something else because I think people really don't understand the loan process, and it has changed a lot since the market declined, and here we are back, even though we know it's a lot easier for you to loan money now than what it was 2008 to 2012. Are there any programs out there? Now, I know there's a VA loan and there's a USDA loan that requires no down payment. Before we got into all the subprime lending, there were loans in which a parent could give a gift fund.
Right.
And they could have this gift as their down payment. I'm kind of curious, how is that looked at now with an underwriter, and are there loans out there that still allow for that gift?
I love them. We do them every day. Underwriters do not discriminate based on it being a gift versus it being at 60 days in your account.
So it has to be in your account 60 days?
If it's your money.
Okay.
Otherwise, it has to be your income. So you could actually get a check from you could get paid a big bonus at your office or just a regular salary check. That money is instantly available for your purchase. I've got a rule of thumb, and the rule of thumb is if it came from you, is it taxable money?
Yeah.
If it's been taxed, you're golden. The government's cool with it. If it's not been taxed, for example, like money under the mattress might have been taxed, but when you deposit it into your bank account, all the underwriter sees is cash going into your bank account. So they can't verify don't go back 2 or 3 years to when you pulled out that cash. They can't do that because there's been too many transactions in between.
So what I'm hearing you say is you pretty much have to have a paper trail or documentation.
Unless it's been in your account for 60 days.
Okay.
Then we're not looking past 60 days.
So there's loans out there right now in which, let's say that my son's getting married and I want to give him of course he already has a home, but let's say that he's getting married and I want to give him, $4,000 to buy a home.
Right.
And that's my gift. So is that allowed now?
Absolutely. And I would give him the money at the time that it's right before it's needed. So
yeah.
If you gave it to him today and he doesn't find a house for 6 months, then the reality is now we have to actually go back to that 6 months worth of bank statements and go back to that original sourced transaction, but not if it's been 60 days in that account.
Right.
So as long as the account has 4,000 in it for 60 days, then we're good. Does that make sense?
Yeah, it does. Now, for those who we were talking earlier in the show today about the market and how people were suffering, and some people had to do a short sale or a loan modification or even went through a foreclosure
and bankruptcy.
Exactly. So what kind of time frame for somebody out there that's been through either a bankruptcy, a foreclosure, or a short sale, or had to do a loan modification? What are the time frames on getting past that and being able to obtain a mortgage?
Okay, so there are two major lines in the sand. If your home purchase price is under $300K, it's pretty much standard 2 years outside of bankruptcy for FHA, USDA, such like that. So what
about conventional?
Well, pause.
Okay.
Great question.
Okay.
But on the FHA 2 years out of bankruptcy, if there was a foreclosure, so the date that foreclosure is filed, if that foreclosure proceeding took place after the bankruptcy or before it, no matter what, the foreclosure takes precedence to that bankruptcy, and you got to wait 3 years from the time of foreclosure.
Okay.
So it's the longer of the two. So that's the tricky layer to that FHA program.
Okay. Now that's good to know. Now, and on a bankruptcy, it's not the date they filed, it's the date that it was discharged.
Amen. Yes.
Correct.
Very good point.
So you're counting forward from that. But if they've gone through a bankruptcy and a foreclosure, then the foreclosure is what you're looking at, and it's got to be 3 years.
Yeah, 3 years, and still it has to be at least 2 years outside of the bankruptcy.
Okay.
So
it's great information.
Both. It is. On conventional, like you asked about, which I think this is very important to talk about because things are loosening. The standard is at least 4 years, and that's what it has been for a while.
Yeah.
And in some cases, I think the key is that you have to run the DU findings, which is a little bit over everybody's head today, but that's why you need to meet with your mortgage folks, because what we do on day one, we pull the credit, we take the application, we verify your information. We get your pay stubs, your W-2s, your bank statements.
Yeah.
We rerun the approval based on that accurate information that we've obtained. And it will tell us, the approval will say, hey, we're going to slide a little bit on this, and we're going to let them, they're going to go ahead and they're approved now.
Wow.
So if it's been 2 years, I recommend you don't wait the full 4 years at all. Well, you need to run the approval.
Well, now, and we talked about history. What impact history has. Let's say that you go back, you're looking at someone's credit history, and it's obvious that these people paid their bills on time for years and years. Boom, they had to foreclose on their home. And you can see that this was probably a one-time occurrence in which they hit a bump in the road, had a hard time. How does that affect them, especially compared to someone who may be looking at their 10-year history? It's always a hit and miss. Is there preferential treatment given to that person that it looks like they had a history of good payments, but here they hit a bump in the road, a hard time in life, or do they really even think about it in those terms?
Well, the credit score obviously trumps. If you go under a certain threshold, it doesn't matter how significant that just sudden, it doesn't matter how significant it is. It matters about that credit score. However, that history will play a part in that credit score. Yeah. So again, it's are they coming out of that issue? And I just can't stress enough that as things are loosening, some folks may have called this company, or especially a bank, most banks are very strict, much stricter than what we have available. And you've got to believe. Look, this is the best time to buy a home right now.
You can't stress that enough.
Well, you got interest rates at the lowest they've ever been.
Ever.
Okay. So in the last 30 something years, 7-point-something% average interest rate.
Prices are still good too. Sales prices are great. They're phenomenal.
It is. And so when can you get the best price? You're leveraged to see that the home prices are going up at the best interest rate available. So you're paying less than to rent. It's like everything's just, all the markers are saying yes, 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 yes.
And rents are at a 15-year high. Why on earth would you want to go throw away that money if you can buy? And most people don't realize it, but they can't qualify. Like you said, it's not that hard to qualify anymore. It has loosened up to some degree.
And it doesn't hurt you to try. Folks say that pulling your credit hurts you. That is a fallacy that I can't stress enough.
Yeah.
You can't, what's the point in credit if you can't use it? The credit score model was not developed to hurt the consumer. The credit score model was meant to hold accountable the qualification of obtaining loans for things. So you get about 7 pulls is my general rule of thumb.
Mm-hmm.
You get about 7 pulls per year in order to avoid it going down. Like the credit score going from a 700, if you had it pulled 8 times, it might go down to a 697.
Mm-hmm.
Big deal. Your history matters. You've got to apply to win. You got to play to win, right?
That's right.
So,
that's right.
Hey, you know what? We're so thankful.
This has been great information, by the way.
I'm glad.
You can put me in the hot seat next week.
Okay, deal.
But no, it's great information because I learned some stuff too. I didn't realize how credit score, how you derived at that exactly. And there's a lot more to it than you think.
Absolutely.
Yeah, it can get deep really quick, and that's why they need to call an expert. They don't have to learn and know all this stuff. They just have to know who to call.
Give them your phone number, Ben. We're running out of
We're
time.
the passionate mortgage company here to serve your needs, help you buy a home through Sabrina Realty, HomeRate Mortgage, 805-9100. This is Hot News Talk Radio, 1240 a.m. And if you
want to buy a home or sell a home, call the experts at Sabrina Realty Associates, 423-499-7780. That's 499-7780. Join us Sunday. We're having an open house from 2 to 4 at 3428 Chattanooga in East Bridge. Come see us.